I'd like to know, is there any specific reason why we see a recent very significant downtrend? Usually we don't get to see in skipper.
Yeah, because I can see that you're sitting on a loss of almost 20,000 there. So, so Vikas, coming to you on this one, short-term view on skipper.
Yeah. So if you look at the stock has witnessed some bounce back from its 200-day average. So it is actually important to hold the average, which is placed near to 415, 410 odd levels. So he should keep a trailing stop if he wants to keep a stop loss from the current levels. And it really amounts to some bounce cannot be ruled out near to 520, 530 because it has witnessed a vertical corrective action from 650 odd levels. So 415, 420 should be the stop loss holding the position.
Thank you so much for that. This is Rucha joining in. But Avinash, I think I'll ask you this question because I think the viewers specifically called out for the reason, if any, for a recent downfall. So if you can highlight something on the fundamentals over here.
No, I think, see, my guess is the markets are a little worried on the execution side of the business. Clearly, Skipper has been one of those companies which has got a good, healthy order book. But I think execution has been something which is a question mark. So I think clearly, markets would possibly be looking at Q3 numbers, how execution happens and obviously how that materializes into top line and profitable growth. So I think, let the Q3 numbers come in. And I think then once the management commentary is out, one could get a better sense. But I think this doesn't seem to be anything wrong on the fundamental side. We'll have to see as to whether it is execution or whether it is some, cancellation of some orders which the markets are fearing. And that is obviously getting reflected in the stock price.
All right. Thank you so much for that. I think that really clarified the viewer very much. Okay, moving on to our next caller, which is Neeraj from Kolkata. Hi, Neeraj. How are you doing?
Yeah, madam, I'm fine, absolutely.
Okay, please go ahead with your query.
KPR Mills, 6,000 shares, bought around 9 years back.
Oh, okay. And
after adjusting all the splits, etc.
Okay.
So, should I hold on or buy some more? I can hold them for another 4, 5, 6 years. Time is not a problem. So, what should I do?
Yeah, definitely, for sure. I think a long-term view. Avinash, over to you. 54 lakh profits over here, and I think that's immense. What's your view on KPR Mills?
No, I think, as a sensible strategy, I think he should book out some money. Because this is big money, and I think in this kind of volatile market, you need to have some, cash ready for your disposal to buy any further new stocks. Clearly, I think the buying has been done at a very good level, and I think that indicates that it's been a multi-bagger kind of return for him. KPR, by the way, is a textile company, and I think textiles have again spot into the limelight. Markets are expecting that in the coming budget also some relief could be coming in for this sector. So I think, longer term prospects are good, but I think if he can at least take out his capital and probably book out some profits, that would actually give him some liquidity also. Plus longer term, I think he can continue to hold.
Okay, thank you so much for that. Long term continue to hold, but definitely book out some profit based on the kind of bearish market sentiment that we have. But what's his particular query is whether he should buy in more of this one, if you can briefly highlight.
No, I don't think. I think at these levels, I think he shouldn't buy. I think these are not the right buying levels. And I think you won't be able to generate the kind of alpha he has generated from his original investment. So I think fresh buying is not advisable.
All right. So that's the view coming in on KPR Mill. Now we're getting a caller from Bengaluru. Hi, Raghuveer.
हाँ मैडम, मेरा पास 50,000 शेयर है वोडाफोन आइडिया का, 13 रुपए में बाई किया हूँ मैं.
ओके.
हमें 1 साल या 2 साल रख सकता हूँ.
ये आपने कब खरीदा रघुवीर?
2 महीने के पहले खरीदा.
ओके, क्योंकि मैं देख सकती हूँ कि आपको अप्रोक्सीमेटली 21,000 का भी नुकसान हो रहा है. सो
मालूम है.
तो आपको ये लॉन्ग टर्म व्यू चाहिए इस पे?
50,000 शेयर है मैडम मेरा पास.
एंड आई एम सॉरी, आई थिंक इट्स 2 lakh rupees loss there. Yes, 2 lakh rupees. Correct, so that's a huge number. Avinash, what do you have to say on Voda Idea? How are the fundamentals of the company looking like? Because I can see in the last 1 month, although it has moved up like significant, 9.51% almost up, but currently it's trading at 8.75, but our viewer is incurring a loss of almost 2 lakh there. So what do you have to say on it?
See, I think within the telecom space, Vodafone is the weakest player. I think every quarter they end up making a loss of almost 2.5 to 3,000 crores. They have been losing a lot of subscribers to both Jio as well as Bharti. So, my sense is that any rise, the investor should use to exit, because this is a sell on rise kind of counter. I think fundamentals are not great at all. And despite the fact that they made a follow-on public offer at 11 rupees, the stock, after touching a high of 18 has come down to below 10 rupees. So I think, probably the investor wanted a short-term upside. I wouldn't be surprised that, if the coming 1 or 2 quarters, the company continues to make a loss, you could see further sell-off. So I think it's better to exit at higher levels. Hopefully, he should get his cost price, and then I think he should exit this counter fully.
Right. And Vikas, do you also have the same opinion?
It's too difficult to judge at all on a single digit on technical basis.
Yeah.
But the stock has shown good amount of traction. So on the higher side, if he gets an exit near to 9.3, 9.5, which is the 100-day average, he should put out something, because it has recovered from the lows of 6.5, 7 rupees.
Right. So that's the view coming in on Vodafone Idea. Now we're getting a caller from Chennai. Hi, Srinivas. Good evening.
I would like to know about MobiKwik, one MobiKwik, madam.
Okay.
I bought at the rate of 470, 100 shares.
Right.
Is it good to hold for 6 months?
I think you've recently purchased it.
Yeah, madam. Correct.
Yeah. So 6-month view on MobiKwik. Avinash, what do you have to say on it?
Well, I think he selected the right company, but I think his investment time frame is too short. I think, the IPO came in at 278 rupees. The stock touched a high of 600. My sense is that, these kind of corrections are very normal for IPOs, because you get to hear anchor selling, you get to see a lot of big investors selling on listing. So if he has to make money here, I think he needs to give in a time frame of at least 12 to 18 months. It's a good payment business. They're a profitable company. So, I think definitely longer term prospects are good, but 6 months is too short to get a decent risk reward. So I think, unless he's got a longer time frame, it's very difficult to visualize, in the short term, whether he could get a decent alpha.
Okay, thank you so much for that. Let's move on to our next caller, Hiten from Mumbai. Seems like our regular one. He's asking on Anant Raj Limited. Hi, Hiten, please go ahead with your query.
Yes, I'm holding 1347 shares at an average price of 813, bought at various levels from October onwards, like around 700, 730 and so on. So I have a short-term request. I mean, I need to wait for the results. I know that it's a strong company. But what do you perceive the target to be in the near short term, please?
Short term, okay. Then Vikash, over to you for short term, sitting on a profit of around 1 lakh rupees. What are the charts indicating?
Yeah, the stock is an outperformer, no doubt about it. From the whole reality space, if you look at it, has consistently moved higher. 950, 960, which is the current high, it should be the first level to watch out for. If that is being crossed, then we could see another high of around 1020, 1020. So first, he should partially boot near to 950 odd levels, which is the previous top.
All right. So that's the view coming in on Anant Raj. Now we are getting a caller from Hyderabad. Hi, Amit. How can we help you?
Hi, good evening, ma'am.
Good evening.
My query is on Gokul Das Exports. I bought 100 shares in about 5 years back during COVID times at the rate of 74 each.
Yes.
So my view is long term, and also want to know about its technicals.
Firstly, I'd like to congratulate you on spotting the right levels there. You're currently sitting at a good profit of 1 lakh rupees. Avinash, as he wants a long-term view on it, how do you see Gokul Das Exports?
No, I think he can continue to hold, because despite the fact that his quantity is less, I think textiles, as I mentioned earlier, is going to be a bright spot in the coming few quarters. And I think hopefully, globally also, I think post the Bangladesh issue, Indian textile companies are going to get a big leg up in terms of the growth opportunity. And Gokul Das Exports is a very large exporter in the textile space. So I think, if he doesn't have any requirements of funding, or he doesn't have any emergency, he can continue to hold. I would believe, that some further re-rating is possible, considering the fact that textile is now going to be a buzzing sector. And I think Gokul Das could do particularly well in the coming, near term.
And also for the investors who want to purchase Gokul Das right now. So are these the correct levels to enter?
This is for me?
Yes, Avinash, yes.
See, I think clearly if you have a 12 to 15 month kind of time frame, then I think even at the current levels or maybe on declines, I think one can definitely accumulate and add on declines, considering the fact that it operates a large business, has a very profitable revenue kind of growth model, and obviously hopefully if something comes in the budget, then I think that could further re-rate the stock in the very near term.
Vikas, what's your take on Gokul Das Exports? How is it looking on the charts?
It has witnessed a good amount of bounce for the last 2 days with the broader market up move. So it can continue to hold on and it would further add if it wishes to. On the immediate basis, it can test near to 1230, 1250 odd levels if the positive news flow comes in through what is expected from the budget.
Okay, thank you so much for that. Let's take our next query, which is a WhatsApp query. Suraj from Kerala asks about Tata Motors bought 105 shares at an average price of around 890 rupees, sitting at a loss of about 13,000 rupees, asking whether to hold or sell. Let's go to Avinash first. How are the fundamentals looking like? And then we can maybe ask Vikash about how the charts are looking like. Avinash, over to you.
No, I think Tata Motors has underperformed largely because commercial vehicle segment has taken a beating in the recent few months. But I think looking at the fact that the budget is around the corner, my sense is that hopefully once GDP growth rate takes off, you would see definitely infrastructure spending picking up again. And I think Tata Motors has also announced that they are going to demerge the passenger car, that is the JLR business, and the commercial vehicle business separately into two companies. So that remains a key trigger for the stock. So my sense is that investors should not panic if he's got at least next 12 to 15 months in mind. This is definitely a very large player in the auto space, and I think once the JLR business is hived off and listed as a separate entity, you could see a significant amount of re-rating. So I think you need to give in some more time here. But yes, short term, the stock may underperform considering the softness in the commercial vehicle market.
All right, so that's a view coming in on Tata Motors. Now, just a quick reminder, viewers, please don't miss your chance to get your stock-related queries solved by our experts. So please pick up your phone and call us right away. The numbers are flashing on your screens right now. And with that, we are getting a caller from Pune. Hi, Praveen. How can we help you?
Yeah, ma'am. Actually, I would like to invest 1 lakh rupees, and my goal is that I need say 2.5% per month. So, what will be the probably good stock to get in?
And which sectors are you looking for in particular? Are there any?
No, nothing specific, madam. Actually, based on the experts' advisory.
All right, so Vikas and Avinash, I'd like to come to both of you all one by one, starting with you, Vikas. So what do you suggest? Because our viewer is having a corpus of 1 lakh rupees and he wants to invest it.
Well, if you look at, he should trim down first of all his expectations because his expectations is somewhere around 2.5%, which sum down to almost 30-35% returns over here. So he should invest into maybe 1 lakh rupees if he should invest, because we believe the earnings potential to be more into large caps. And it would be a volatile year with a lot of news flow data driven. So 50% he should invest into large caps. From among the large cap side, he should invest into private banks, chemicals and auto sector. 20 to 25% he can invest into some amount of mid caps from the chemical space or from the new age companies. And another 20-25% he can do it in SIP mode, get into more diversified into the mutual fund space. So that should be the allocation in terms of the overall setup.
Now, Avinash, what do you have to say on it?
No, I think clearly, unless the investor has a slightly medium-term horizon, see, I think wealth is never created in the short term. And my sense is that, investment may look boring, but I think that is where the real big money is made. So I think, as Vikas said, we would also like to allocate 1 or 2 sectors, typically capital goods, real estate. These are sectors where I think, a lot of growth can come in, plus the budget can be a kicker here. So within these sectors, I think a DLF or a Larsen and Toubro, maybe an automotive player like Mahindra and Mahindra, at lower levels could possibly accumulate it. I think he needs to give in a time frame of at least 12 to 18 months to get a decent alpha. The markets are volatile, so I think he's got to realize that in these markets, capital protection is also equally important.
Okay, thank you so much for that. But as Vikas rightly mentioned, one should actually lower their return expectations. Expectation of a 2 lakh profit on a 1 lakh capital is something I think that one should look over again. But anyways, moving on to our next caller, which is Pandit from Indore, asking about Shop Stop. That's interesting. Hi Pandit, please go ahead with your query.
Hello.
Yes, please go ahead. We can hear you.
मैम मैंने ये शॉपर स्टॉप का 1000 का शेयर लिया है। तो मैम जानना चाहते हैं इसको आगे कंटिन्यू करें कि नहीं। मैंने 2621 भाव से लिया है।
Sure. Okay, we'll go ahead with your query. He's asking for a short-term view on Shopper Stop. Bought 1,000 shares, sitting at a loss of about 3,000 rupees. Vikas, what do you think of Shopper Stop? What are the charts indicating?
Well, the chart has witnessed some amount of corrective action over the past few months, but the silver lining is that the stock has retraced some amount of support near its 200-week average and witnessing bounce. Yesterday also the stock witnessed some amount of volatility and moved higher near to 685-700 and then again corrected. The way the textile sector is shaping up, the stock is looking attractive from the retail perspective. So we should continue to hold on. The first immediate target would be near to 730-750 levels over the next 4 to 6 months.
Right, so that's a view coming in on Shopper Stop. Now we are getting a caller from Chandrapur. Hi Atul, thanks for calling.
Yeah, hi.
Yes, how can we help you?
Ma'am, I have the shares of the Nestle India at the price of 2700 and it is a 100 quantity and my term is a short term.
Okay, but 6 months or 1 year?
Yeah, 6 months.
6 months. All right, because I can see that you're sitting on a loss of almost 1.5 lakh there. So Vikas, coming straight to you, Nestle India, I can see that it has not been performing that well in the past 1 year. It was down almost 15% in the past 6 months. Today also it was down. So what do you have to say on it?
Well, look at the views of short term and this purchase price is somewhere around 2,700, so almost 20 to 23% downtick from its purchase price. So either if he wants to recover its loss, he would have to average at current levels and get exit near the average price of 2530, 2550, which looks like would recover over the next 6 months. What his view is, because the sector has witnessed good corrective action, but it is making higher bottoms, higher structure on the weekly charts. So 2350 to 2500 would be expected over the next 3 to 4 months.
Okay, thank you so much for that. Let's move on to our next query, which is a WhatsApp query. Hirul from Bombay is asking about Coromandel International. Actually, apologies for that. She holds 38 shares at 960, sitting at a decent profit of 32,000. Whether hold or sell. What are the charts looking like, Vikas? And then we can move on to Avinash on fundamentals.
It's a consistent outperformer. It has witnessed good amount of traction, but lately some amount of profit booking has been witnessed into the stock. So we believe the stock will face some more pressure and decline near to 1580 to 1600 levels. So some retracement and minor pullback cannot be ruled out. So if she can put some amount of partial profits, if not fully, then at least 50% profits can be put at current levels and buy in declines near to 1580.
Okay. Booking 50% profit is what he suggests, and what are the fundamentals looking like, Avinash?
See, I think clearly, the fundamentals appear to be quite rock solid, and I think fertilizer is a space where I believe, obviously some policy announcements could come in the budget. Most importantly, Coromandel is one of the integrated players, which operates both in the urea as well as the DAP space and the nutrient space. So they are very well positioned. Hopefully, the monsoon has been quite good. So obviously numbers, for the third quarter should be equally better. But my sense is, the buying price has been very low. The investor has almost doubled his capital. So at least a 25 to 30%, cashing out would not be a bad idea. So I think profit booking in 25 to 30% of the allocated quantity is desirable. And I think probably the rest can be held on for the longer term.
All right, so that's a sell view coming in on Coromandel. Now, we're getting a caller from Pune. Hi, Aditya. How can we help you?
Hello, ma'am. Good evening.
Good evening.
So,
My question is, I'm looking to invest about 2 lakh rupees for a tenure of about 6 months.
Okay.
And I already hold ITC Limited that I bought during demerger.
Right.
So my next position I'm looking at is between Biocon and Marico.
All right.
With a target of 6 months.
Okay. So, and why only these two, if I may ask?
Because I saw the Jeffries report on Marico and, on Biocon. So it seemed a good prospect with a short-term goal. So just wanted to understand what's your view on it.
All right. So I can see that you have well researched the stock. So I'll get your view on it. Vikas, what do you have to say? Marico or Biocon, how are these looking on the charts?
So both looks pretty interesting, but he is already holding ITC Limited, one from the consumer segment. So to diversify his portfolio, you can add one pharma name and near to Biocon Limited. The stock is witnessing good amount of traction, so he can invest at current levels. It's an outperformer, so we believe the stock will move higher near to 460 to 480 levels over the next 4 to 6 months. And if he wishes to further diversify, he can invest 50-50 both into Marico and Biocon both.
Right. And Avinash, what do you have to say on it?
No, I think clearly Biocon seems to be a good outperformer. I think on the regulatory side also, they've got some regulatory approvals for their new drug launches. So I think Biocon should do well. Biometrics also is one area where I think the markets are looking forward for value unlocking, happening for Biocon. But I think as far as Marico is concerned, I would prefer to wait for the December quarter numbers. I think FMCG segment in all looks to be extremely, challenging now. Volume growth is completely missing, and I think it's better that once the Q3 numbers are out, probably Marico could be accumulated at lower levels. So I think, as of now, avoid Marico, but obviously Biocon from a longer term perspective can be definitely be, accumulated.
Right. I hope, Aditya, your query has been solved there. Now we'll have to slip into a short break. Keep sending in your queries, viewers, on WhatsApp and call in. Now we'll be right back on Ask Profit. Stay tuned to NDTV Profit.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they're expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low-middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
I present the budget for a historic
Entrepreneurship is like a marathon. You need staying power, so you can't just be impulsive, jump into it, because we'll run out of steam very quickly.
आप कॉन्फ्रेंस रूम में बैठे हो, सैलरीज पेरोल देने के पैसे नहीं हैं, it's 1 week later.
No investor would touch us in 2013, and as we reaching end of the year, we did not have enough money in the bank to even meet the payroll.
What was your biggest challenge?
Welcome back. You're watching Ask Profit on NDTV Profit, and we are joined by Avinash Gorakshakar on the fundamentals and Vikas Jain on the technicals. So viewers, this is your chance to get all your stock related queries answered. So please pick up your phones and call us right away. Now with that, we are getting a caller from Chennai, and Shankar is there on the phone line. Hi Shankar, good evening.
Hello, good evening, ma'am.
Good evening. How are you?
Yeah, fine, very fine.
Please go ahead with your query.
Thank you. Last month I bought a Mazagon Dock 20 shares come bonus at the rate of 4,840 rupees.
Yes.
Now my holding will increase 40 shares, but the rates come 50% slash.
Yes.
I want to know, in near future, Mazagon Dock will reach its 52-week high. That means $3,500.
All right. So I'll get you a view on that. Currently, the stock is trading at 2,224, and our viewer caller Shankar is incurring a loss currently. So, but the defense stocks have been performing really well. So, Avinash, even though the caller is incurring a loss, but do you see it consolidating in the future as well? Avinash?
No, I think, see, if he's purchased Mazagon Dock, then I think he needs to take a call here. I believe he needs to take a longer term call on the stock. My sense is these are not stocks which are, stocks which could double or move up significantly, because a large part of the rally has already taken place. So these are basically compounding stocks which, investors have to realize that in the last 2 years, there has been a multiplication in the values of such companies. So long-term prospects continue to be rock solid. I think unless you've got a time horizon of at least 12 to 18 months, in the short term, it's unlikely that, the stock can get re-rated significantly. But yes, longer term, I think defense is going to be a very solid kind of business. And hopefully in the coming budget also, there could be some good announcements. So I think, he should hold on for longer term, and definitely then he could get a good risk reward.
Okay, definitely for sure. Actually, let me squeeze in my query about defense too. Do you think this is a good time to accumulate defense stocks ahead of the budget? And if yes, which one is your preferred pick, Avinash?
No, I think within the defense space, I would prefer, stocks like Hindustan Aeronautics and Bharat Electronics. These are rock solid companies, a very solid order book, and very good scalability of the business. So I think, if somebody has a 12 to 18 month kind of time frame, then I think HAL at the current levels can offer a very good risk reward. Similarly, BEL is sitting on an order book of almost 35,000 crores. It's a debt-free business. So I think, you need to give it some more time here, but these are definitely well-established businesses, and when one can accumulate for longer term.
Briefly, Vikash, what are technical charts looking like? Can one enter into defense stocks?
Yeah, if you look at the defense stocks have peaked out somewhere much before when the markets peaked out into September. So defense stocks peaked out somewhere into June 2024. And from there, we have continuously witnessed drawdown. So 8-month corrective price pattern, corrective action and cycled action both have been finished through. Now we are making higher bottoms, higher top formation structure on the daily charts and witnessing good amount of volume price action. The defense budget would also provide some amount of recovery into the process. So it's a good time to buy into these names like Mazagon Dock, HAL, BL, what Avinash refers to. And this stock looks attractive from current levels. In case of the query from the investor that 3,500 may not be visible for the next 1 year, but at least within 2.5 years, the 3,500 should be easily crossed in case of Mazagon Dock.
Okay, thank you so much for that very detailed analysis on defense stocks. But let's move on to another caller. Praveen from Bombay is asking some query on whether it's the right time to buy into RattanIndia Enterprise as well. This one is largely trading flat in trade right now. Hi, Praveen. What is your specific query about, and what's your kind of holding period?
Yeah, good evening, ma'am. Actually, RattanIndia, I may hold for, say, maybe 2 years. It has come down from all the way to from 95 to 57, 54 levels. So whether it's a right time, whether this is a right stock to enter for, say, 2 years horizon or something?
Returns are you looking forward to? Praveen?
Hello?
Yeah, what kind of returns are you looking forward to?
Ma'am, 18% or 20% return is will be fine.
20% within the next 2 years in such a market. Avinash, what are your thoughts on RattanIndia?
No, I think first of all, this company is into electric vehicles and drones. I believe, it's a low price stock, but it's corrected, from levels of almost 100 plus levels. And I think, the market is yet to get a taste of its long-term sustainable kind of business model. So I think, the management has been promising, very solid growth in terms of top line, in terms of profitability. My sense is that, these kind of stocks may prove a little risky, if things go wrong. So my sense is, if he has to take a call, I think he can possibly look at a slightly longer term period. I think, 12 to 18 months, if he can buy into a small quantity and try it out, this would be a contra call. But yes, if he has the risk appetite, he could definitely chip in a few kind of investment and, take a call for the next 12 to 18 months.
Okay, but can you just recommend to our viewers a safe bet of earning 20% in next 2 years? I think that is what intrigued me to ask you a follow-up on that one.
No, I think the best place to invest now is the PSU banks, completely ignored and where there's good amount of value. So I think, stocks like Canara Bank or maybe for that reason, a Bank of Baroda. Canara Bank trades at even less than 1 time its book value. The book value is 101 rupees. The asset quality is very robust. They have investments in the investment business, the AMC business, plus Canfin Homes is their subsidiary. So I think here at least a price of 150, 160 looks very much possible. Banks cannot be ignored for a long time. And these are large banks, where most of the asset quality, issues of the past have been completely wiped out. So I think Canara Bank, Bank of Baroda are safe bets in this kind of volatile market.
Right. So that's the view coming in by Avinash. Now we have a caller from Mumbai. Hi, Hiten.
Yeah, hi.
Yes.
I have a query for transformers and rectifiers.
Yes.
I bought it just before the Q3 results, and around 1230 is my buying price, 405. And now it has corrected to 976 euro, despite it has come out of the profits in the very few quarters back.
Yeah.
As well as this quarter results were very strong. So I can wait for 1 to 3 months. What are the chances of the recovery of the stock at
because I can see that you're sitting on a loss of 1 lakh rupee there.
Yeah.
Vikas, coming straight to you on this, how is transformers and rectifiers looking on the charts?
So if you look at the chart, has a vertical amount of up move over the last 2.5 years. So the stock has witnessed huge amount of multiplier effect from the lows of sub 100 to 1200 odd levels. So but the stock lets pretty much volume. It moves very on low volume base. Now on the immediate basis, the stock has a good support near to those 930, 950 odd levels. So if that is being sustained through, which is the 100-day average, then we could expect some amount of bounce back. But if that has been also been weighed through, then the longer term structure could turn weak.
Okay, so I hope your query has been answered there. We are getting another caller from Noida. Hi, Ravi.
Yeah, hi. Good evening.
Good evening. Please go ahead with your query.
Yeah, so my query is around Piccadily Agro. So should we hold it or should we wait? I have a long-term plan for it. So
and how many shares have you bought?
I have 1,000 shares and I bought it at 778.
And when did you buy it?
I bought it around 1.5 months back.
1.5. So it's a recent purchase, and I can see that in just about months, you are sitting on a loss of 12,000 there. So, Avinash, coming to you, how are the fundamentals of the company looking like?
So I think the company is doing well, but I think probably there was some profit booking post the Q2 numbers, and I think most importantly, consumption has got hit. So that is the key reason, the stock has seen a huge selling pressure. So I think we'll have to wait for the Q3 numbers, see what has been the kind of performance in the December quarter and the kind of management commentary. See, the company is a very well-known player in Eastern India. It operates in the brewery space. So my sense is that, if the investor can hold on for the next, say, 12-15 months, and then obviously, get a better risk reward. In the short term, the stock has been very volatile. But longer term, I think definitely once numbers get better, the stock can get further re-rated.
Okay, thank you so much for that. Our next caller is Sandeep from Amravati. Hi Sandeep, आपका प्रश्न क्या है?
AGI के बारे में.
Okay,
AGI packaging.
Okay,
AGI packaging.
Okay, AGI Greenpac. He's bought about 25 shares at 1,100, sitting at a loss of about 2,500. If you can pull that up again, just want to make sure if I am right. Yep, there we go. 2,500 kind of loss over here. Share trading down about 1.5%. Okay, our experts, Avinash, over to you. What do you think of this one?
No, I think it's a large player operating in the domestic building product segment. I think clearly the investor needs to give in a slightly more longer term time frame. I think he's invested here since only the last 3 to 4 months. See, whenever you buy a share which is trading near to its 52-week high, you need to give in some time because the stock has moved up from considerable lower levels. So I think my sense is that unless he can hold on for the next 3 to 4 quarters, I don't think he could expect a very decent risk reward. But yes, longer term, I think he could expect decent levels. In the short term, I think we'll have to wait for the Q3 numbers and then only one can take a fresh review.
Okay. 2 to 3 quarters तक आपको hold करना है संदीप, ये हमारे experts suggest कर रहे हैं. But let me go on to Vikash and about his thoughts on this one, please.
If you look at AGI has declined from the highs of 1,300 odd levels and witnessing some amount of corrective action. No doubt it has witnessed bounce from the 200-day average on 3 counts over the last 1 year. So if it is able to hold the 200-day average near to those 920, 930, then we would witness. So 920 should be the stop loss level if he wishes to put so. On the higher side, multiple band of resistances are near to 1130 to 1150, which is near to its purchase price.
Okay, so I think आपको ये समझ आया होगा, हमारे जो एक्सपर्ट्स हैं उन्होंने होल्ड सजेस्ट किया है. एंड लेट्स गो अक्रॉस टू अनदर कॉलर नाउ. वी आर गेटिंग अ कॉलर फ्रॉम हिमाचल प्रदेश. हाय परमजीत, गुड इवनिंग, हाउ कैन वी हेल्प यू?
Good evening, ma'am. I am having 2,000 shares of Motilal Oswal.
Okay.
At the rate of 600.
Right.
Want to know long term as well, short term view.
Because congratulations there, you're sitting on a very handsome profit of 5 lakh rupees. So I'll get your view on it. Vikas, coming to you, how is Motilal Oswal looking on the charts?
If you look at the structure has turned weak for across all the broking houses. So if you look at Angel has witnessed a good 30-35% north from its recent high. Other broking stocks have also been followed through along with the broader market. So no doubt Motilal Oswal is a good play in the longer term, but the way the liquidity has been picked up in terms of the bonus issue, so the stock would see some amount of corrective action. We believe the stock can slide further near to 720, 730 levels on an immediate basis. So you can put some amount of profits and re-enter at 730 odd.
Right, and since Paramjeet had asked for a long-term view as well, so Avinash, what do you have to say on Motilal Oswal?
See, I think Motilal Oswal is a large broker, which has got multiple chains of revenues, from the asset management business and the PE business. Most importantly, today's fall has been aggravated by the fact that, most of their funds are holding a large position in Kalyan Jewellers, and Kalyan Jewellers has seen a very sharp correction of almost 35% in the last 8 to 10 days. So, that is something which has rattled the markets, and I think that has created a negative impact on the Motilal Oswal stock. But I think longer term, if the investor has got a 12 to 18 month kind of time frame, then I think this company would do well. They can easily suffer this near term kind of loss and obviously bounce back quite strongly. So I think longer term, money can be made, but yes, in the short term, because of this development, the stock may underperform.
All right, so that's the view coming in on Motilal Oswal. Now we're getting another caller from Pune. Hi Manish, good evening.
Yeah, good evening, ma'am. This is Manish. Actually, I want to invest or accumulate in State Bank of India stocks.
Okay.
So at the current levels, whether it is right to invest in SBI?
Do you want to invest for a long term or a short term?
Yeah, it's a long term call.
Long term call. So Avinash, how are the fundamentals of SBI looking like? Are these the current levels to enter?
No, I think if he's got a 2-year kind of view, then definitely he could accumulate a stock at the current level. And here also, I would suggest that, he should deploy, say, 25 to 30% of his capital now and wait for the Q3 numbers. Once the Q3 numbers are out, there would be a little more clarity on the overall performance and the kind of growth commentary the management would, share. Because clearly banking has come under a cloud because deposit growth rate has taken a beating, credit growth has come down. So I think, with GDP growth rates revised downwards, obviously the banking sector has taken a hit. So I think if he wants to, get a better price, I think he could deploy 25% at the current level and wait for the Q3 numbers and then possibly, buy on any decline, which I think could possibly happen after the Q3 numbers.
Right. So that's the view coming in by Avinash. Now we have a caller from Singapore. So this is the first international caller on the show today. So hi Kamran, how can we help you?
Yeah, hi. I'm interested in getting some stocks of Tata Steel.
Right.
But I would like to get a long-term outlook on the news about China perfecting the flash iron making process. The news that came in December 2024.
Yes. So do you want to invest for a longer term or a short term?
Yes, long term.
Long term. Avinash, coming straight to you on this, how are the fundamentals of Tata Steel looking like?
I think, metal companies prima facie are yet facing significant kind of headwinds because, the most important driver in the metal market is China buying, and Chinese buying has not been significant. So unless global metal prices start moving up, it's not only the domestic market which is going to re-rate most of the metal companies, which include Tata Steel also. So I would suggest that in case, the investor wants to take a position in metal companies, it's better that he waits for the Q3 numbers because Q3 numbers, my senses, are unlikely to be great. In fact, the stock price clearly indicates that. And obviously, if the performance is not up to mark, then possibly he could definitely think of chipping in after the Q3 numbers, which would give him a better entry point. So maybe not at the current level, but yes, wait for the Q3 numbers to get better clarity, and then one can start building positions.
Right. And Vikas, what do you have to say on it? How is Tata Steel looking on the charts for short term?
So I agree with Avinash. He should wait for some more time because the stock is witnessing pressure, and the way the dual ladder index has been retracing near to 52-week high, metals would continue to remain under pressure. So the stock can witness further corrective action of 5 to 7% near 218, 215 levels. So if that opportunity comes through at that point of time, he should invest into.
Okay, thanks so much for that. Next caller is Srinath from Hyderabad asking about Apollo Tyres. If you can pull up the stock, we'll see that this one is actually around, flat in trade as of today, and our viewer is sitting at a loss of about 87,000. Hi, Srinath, please let us know what's your query on and about.
I just want, hi, good evening.
Yes, please go ahead.
I just wanted to know the technical view of Apollo Tyre for coming weeks.
Technicals on Apollo Tyre, as we can see, he's bought 3,500 shares at 480 rupees. Currently, the stock is trading at 455. Vikash, what are the charts indicating?
So a vertical sell-off has come into those from 530, 550 odd levels. But silver lining is that some amount of support near to those previous support area of 435, 450. So we believe the stock could move higher near to 480, 485 levels on an immediate basis, which is the 20-day average. And the stock could see further advanced if it moves higher with strong volumes crossing those 485, then it can move further higher near to 510. So we can continue to hold with a stop of 435 on the downside.
Okay, so that's a whole view coming in on Apollo Tyres there. Now we are getting a caller from Hyderabad. Hi, Srinath. Srinath, can you hear me? Oh, I'm so sorry. Chandra is calling from Vijayawada. Hi, Chandra. Can you hear me?
I can hear me, ma'am.
Yes, good evening. Please go ahead with your query.
Ma'am, I purchased IOC stocks, ma'am, in November month.
Okay.
400. After that, I averaged the stocks. I purchased 180 rupees. After that, I purchased it total 900 shares at IOC. Now the average is 150. Can I hold it or not, ma'am?
Because I can see you're sitting on a loss of almost close to 21,000 there.
Yes, ma'am.
And currently the stock is trading at 127 and you bought it at 150. If I can see the last 6-month picture of the stock, so it was down 24%, over 24% in fact. So Vikas, how is Indian Oil Corporation looking on the charts considering the Chandra is also incurring a loss right now?
So the stock has been continuous pressure, and the way crude oil prices have been moving higher, the oil marketing companies are witnessing further sell-off. But as he has been continuously adding in through, and the share price has declined more than 15 to 17% from his purchase price, he should hold on because some bounce cannot be ruled out from current levels. So 140, 143 it would be the bounce level area. So he can hold on to his investment at current levels, and if it bounces near to 143, 145, he can sell some of his holdings.
Okay, thank you so much for that. Let's move on to our next caller query. Mr. Das Gupta joins in from New Delhi. Hi Das, can you hear us? Please go ahead with the query.
Hello, good evening, ma'am.
Yes, please go ahead.
I would first and foremost would like to thank your esteemed panel for the very intelligent and insight given to the share, which helps us a lot.
Thank you so much
ma'am,
for that.
My question is, I have 158 shares of BEL, Bharat Electronics Limited.
Okay.
Purchased at an average price of 85.
What's your query about? Want to hold it for long term?
Yeah, I have BEL shares, 185, average price of 85. What is the long-term view of the shares? I'm willing to hold for long term, 2 years plus. And when is a good time to enter again?
Okay, good time to average it out. Again, already sitting at a profit of 30,000. A long-term view outlook for next quarters is what he is looking forward to. Avinash, this one is for you again, I guess.
No, I think he can continue to hold. As I mentioned earlier, BEL definitely looks promising. He's got the benefit of price. He's bought in pretty early in the stock. So I think, his margin of safety is pretty rock solid. So I think he should continue to hold. I think rather than looking at one quarter, I would believe, if he can look in for the next 12, 18 months, because obviously, the company is sitting on a very healthy order book. Obviously, if the budget comes out with some specific announcements on the defense budget, on the defense requirements, that could also possibly, re-rate the stock in the very short term. So I think buying the stock at these levels would not be a great idea. If he wants to add, I think he should look at a significant correction, which I don't think will happen, considering that the numbers for the Q3 numbers are also going to be pretty solid. So continue to hold and keep a time frame of 12 to 18 months.
All right, so that's a hold call coming in on BEL. Now we are getting a WhatsApp query from Kamath. He writes to us from Bengaluru saying that he's bought 1,000 shares of CESC at 185 a piece. He's asking for a long-term view on it. So currently the stock is trading at 154 and he's sitting on a loss of 3,000. But Avinash, do you see CESC's fundamentals improving in the longer term?
Yeah, power generation as a theme is really very, very rock solid. I think, if the investor has a time frame of at least a couple of years, I think he can make a decent kind of risk reward in CESC. Power generation is growing rapidly, and I think CESC operates largely in the Eastern India. And obviously, after the demerger is now a focused power play. So I think, this kind of drop should not make the investor panicky. I think you have to give in some more time here. These stocks move in pretty slowly, but the business is robust and the demand is going quite steadily. So I think keep a time frame of at least 12, 18 months, and I think you could get a decent risk reward.
Vikas, what do you have to say on it?
Yeah, it should continue to hold on because it is at multi-month support. No doubt 210, 215 levels is a multi-year high. But the stock has been entered into the F&O segment, so volume participation has recently increased, and the broader market correction has given an opportunity to add into this name. So on an immediate basis, the stock would again bounce back near to 173, 175.
All right, so that's a view coming in on CESC by Vikas. And with that, I'm afraid, gentlemen, we are running out of time. But thank you, Avinash and Vikas, for being on the show.
Thank you very much.
And helping our viewers with their queries. And viewers, well, that's all the time we had on this edition of Profit Ask Profit. I'm sorry. But we try to take as many queries as possible, but those of the queries that were left, we will certainly take them up tomorrow. So don't forget to send in your queries on WhatsApp. And with that, it's a goodbye and stay tuned to NDTV Profit.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for Budget 2025. cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming union budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs 10 lakh to boost disposable income. The new tax regime, which restricts exemptions and offers fewer deductions, is already the default option for taxpayers, with 72% having shifted to it. Notably, the July budget increased the standard deduction to 75,000 and revised both tax slabs and rates. Under the new structure, income up to 3 lakh is tax-free with progressive rates ranging from 5% to 30% for higher income tax brackets. As Budget 2025 nears, there are growing expectations for reforms aimed at easing tax compliance, particularly for NRIs, that is non-resident Indians. Here are the key suggestions highlighted by Deloitte. Firstly, simplifying the tedious process for property transactions involving NRIs. Currently, buyers must withhold tax at a higher rate, obtain a TAN and file ETDS returns. Introducing a challan cum statement system similar to residential transactions could streamline the process and reduce the burden on buyers. Second, enabling tax payments from overseas bank accounts. Presently, tax payments must be made through Indian banks, making it cumbersome for NRIs. Allowing payments from foreign accounts would enhance convenience. Third, improving e-verification by extending OTP options to foreign mobile numbers. This change would simplify tax filing for NRIs, reducing paperwork and eliminating the dependency on Indian mobile numbers. Lastly, facilitating tax refunds to overseas bank accounts. Refunds are currently credited to only pre-validated Indian accounts.
Nifty Sensex end flat, maintains gaining streak for 2 days. Sectoral indices end session mixed, with realty leading the gains. Auto, FMCG, media and pharma end with cuts. US December core inflation rate slows to 3.2%, lesser than expected. Consumer price index increased 0.4% on the month, putting the 12-month inflation rate at 2.9%. HDFC Life's Q3 net profit jumps over 13% year-on-year to 415 crore. The net premium income rises 10% on a yearly basis. India marks historic milestone in maritime strength. Prime Minister Modi commissions 3 state-of-the-art warships. INS Nilgiri, INS Surat and INS Bakshir, says India is becoming a major maritime power. Government may widen the reach of the PM internship scheme. Sources have told NDTV Profit that the eligibility criteria, including age and qualifications, might be eased as well. EV battery supply chain may get a boost in the upcoming budget. The industry hopes for a package based on the ministry's scheme for promoting manufacturing. We at NDTV Profit are focusing on what the everyday citizen expects from the finance ministry. We bring you discussions on topics like taxation, agriculture, and more in the run-up to the 2025 union budget. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host, Himakshi Bahugna. Along the next half an hour, viewers, will bring you the latest on the markets as well as national and international news. So the markets witnessed a positive closing session with the Nifty crossing 23,150 and the Sensex climbing by 170 points. Realty and IT sectors led the rally, with the Realty Index rising by 1.39% and IT up by 0.79%. However, the media, pharma and auto sectors weighed on the indices, pulling them down. My colleague Harsh joins us with further details.
Well, it's a tough day of trade. Markets haven't moved this way or that. It's been a largely flattish move on the index. But, the couple of positives is, one, we've closed in the green. The other one is that the breadth has also closed positive. It was a choppy breadth through the day. Saw a couple of times where we flip-flopped between the red and the green. But we've closed in the green where the breadth is concerned. So that's the other one. But markets just looking exhausted in general, at least through the day today. You're looking at gainers to the likes of a Trent, all news-based, all largely news-based. The movers, Trent, Reliance closed in the green and therefore was part of the positive contributors on the index. Some of the negative ones, you had the Bajaj twins, you had M&M as among the top losers in trade, 2+% lower. Shriram Finance as well as part of that list. Some good moves that we saw yesterday got reversed, especially something like a Shriram Finance. So that's one to watch out for. In terms of the broader markets as well, we saw a bit of an outperformance versus the index itself, 0.5% higher on both the mid cap as well as the small cap. But more importantly, there were big newsmakers and it was buzzing. One, something like a Credit Access, for example, a Goldman Sachs super cautious stock was down 6.5%. Some of those PSU banks which were flying or flew away at the latter half of trade yesterday saw sharp cool-offs in trade today, given the kind of move we saw yesterday. So some of those moves got reversed very, very quickly today, and there was some which were in the news, something like a Devyani International where Macquarie, extremely bullish, saw a solid move, 8% plus kind of move. And therefore, those were some stocks in focus, select pockets. Where sectors is concerned, IT was the one that really stood out, especially in the mainstay Nifty. Realty was the other one, which closed well in the green. Outside of that, you had a kind of a muted day for the rest of the sectoral indices, which kind of underlines that the breadth was fairly weak in that sense.
Right, Harsh. Thanks for that. Now, an interesting but sobering statistic. Nifty hit its peak at 26,277 on September 27, 24. But since then, it's been a steep decline. When you scale this fall to all BSE listed companies, investors have lost 56 lakh crore in market cap. That's the kind of wealth erosion we are talking about. Let's head over to Agam to find out which stocks have been the biggest wealth destroyers.
So there's been a significant depreciation in the overall market capitalization of Indian markets ever since we've seen the Nifty and the Sensex come off from their life highs. With the near 10 to 11% correction for the Nifty 50, in this course we have seen the Indian markets lose as much as 56 lakh crore rupees in terms of market capitalization. Moreover, if you just consider the Nifty 50 stocks, they have lost as much as nearly 26 lakh crore rupees, and the top 100 companies in market capitalization as an aggregate have lost as much as nearly 42 lakh crore rupees. Now, even as we see these benchmark indices come down, the heavyweight companies like Reliance Industries and HDFC Bank have lost significantly as well. In fact, Reliance Industries has seen a depreciation in its market cap to the tune of nearly 3.9 lakh crores. This is followed by Hindustan Unilever, down 1.4 lakh crores, with NTPC, Bajaj Auto, as well as Asian Paints losing out significantly as well. Let's not forget, among the other names, we're also looking at a significant depreciation in names like Coal India, in Tata Motors, Bharti Airtel, as well as HDFC Bank. But in this case, the loss is anywhere between 81,000 crores to as much as a little over 90,000 crores. But there certainly has been a lot of loss as far as shareholder value is concerned, and it's going to be a wait and watch whether or not we eventually do see some sort of recovery in the coming weeks and months.
Thanks, Agam, for that. Now, let's also get you the fund flow picture this evening. While domestic investors continue their buying spree and buy equities worth 3,683 crore rupees, foreign investors offload shares for the 7th straight session and sell Indian equities worth 4,533 crore rupees. Viewers, HDFC Life's Q3 net profit is at 415 crore versus estimate of 417 crore. The profit gains 13.7% on a yearly basis. Harsh joins in with more details.
The total APE, which is annualized premium equivalent, which is equivalent to all the new business that's come in, has grown at just about 12%. The expectation was growth will come around the 16 to 17% number. So that has come slightly lower than expected. 3,700 crore was the number expected. It's come in at 3,569 crore for the quarter ended December. But more importantly, the value of new business, which is a metric of profitability on this incremental business that HDFC Life has done, that's come in at 930 crore. It's come in higher than expected. So while the top line hasn't grown as per expectations, the profitability factor has grown more than expectations, and therefore your margin expansion has been very, very sharp. Your VNB margins was expected at 24.3% odd, flattish sequentially. It's come in above the 26% number, and that's where a lot of the positivity will start getting built in. Now awaited will be how management commentary plays on the stock price performance tomorrow. So stay tuned for that.
Right, Harsh. Thanks for taking us through those numbers there. L&T Tech reports its third quarter earnings. Margin expands, revenue and EBIT rise while profit stays flat. Rucha is joining us with more on this.
L&T Technology Services reported its third quarter numbers. Three key highlights include: number one, revenue and profits below estimates, margin came in above estimates, healthy large deal pipeline, and number three is demand improvement is seen in sustainability and tech vertical. Moving on to numbers, well, revenue was up about 3.1%, margin came in at 15.9% versus estimate of 15.7%. Net profit was largely flat at 322 crore rupees. This is versus expectation about 337 crore rupees. Now remember that margins were hit by a one-time merger and acquisition cost as the company completed acquisition of IntelliSwift during the quarter. Excluding this, margins stood at about 16.2%. Moving on to large deals, well, healthy large deals bagged about 8 large deals in the third quarter. In terms of constant currency, well, revenue growth came in at about 3.1% quarter-on-quarter and 8.7% on a year-on-year basis. Management also talked that they are seeing demand improvement in the tech and sustainability vertical. And lastly, in terms of FY25 guidance, near-term revenue guidance about 10% in constant currency terms is what the management has guided. Now, this was previously guided for at 8 to 10%. Now, this guidance is including the inorganic expansion that the company has made. Now, in terms of medium-term outlook, the company has reaffirmed its medium-term outlook of $2 billion in revenue and 17 to 18% in EBIT margins.
Thank you, Rucha, for taking us through those numbers. Now, on to an NDTV Profit budget exclusive. The government might widen the reach of the PM internship scheme. Yes, sources have told NDTV Profit that the eligibility criteria, including age and qualifications, might be eased as well. Shrimi joins in. Shrimi, what are you picking up from your sources?
Yeah, sources tells NDTV Profit is that government is looking at, widening the reach of PM internship scheme where they are planning to engage with states, districts and more companies. They are looking to be added and participate in the scheme. In fact, they are also looking to modify the scheme terms and eligibility, particularly from the age and qualification point of view. Remember, the scheme was, announced last year in the budget and being rolled out as a pilot run where the companies have posted created the internship position of over 1.25 lakh positioning, and out of that 80 to 90,000 position being offered to interns. So now they're looking to sort of expand this entire scheme and roll out in a full-fledged manner by February, because they are somewhere aiming to sort of create the internship position to about 1.26 lakh by the end of March, and that's why we could see some sort of tweaking and announcement in the upcoming budget to make it more attractive so that more people could participate in the PM internship scheme.
Viewers, let's also take a look at some global market action. Wall Street opens higher as the latest consumer price index report shows core inflation unexpectedly slowing to 3.2% in December. Meanwhile, the 0.4% month-on-month uptick in headline inflation comes in slightly above the 0.3% forecast. Remember, the softer than expected US inflation data makes case for the Fed to be able to still cut interest rates in 2025. Now, the European markets also traded higher as investors reacted to a cooler than expected inflation reading of 2.5% out of the UK. Now, the EV battery supply chain may get a boost in the upcoming budget as the industry hopes for a package based on ministry's scheme for promoting manufacturing. My colleague Rishabh Bhatnagar filed a report earlier. Let's take a look.
What we're hearing from industry sources is that there is a package in line specifically for the EV battery supply chain. This has nothing to do with electric vehicles in general, but rather the battery component specifically of this. Now, what we're hearing is that this will not be a PLI sort of a scheme, but rather a specs sort of a scheme. Now, specs is a scheme that was introduced by the MeitY a few years back, and now a scheme on those lines is needed. The difference between these schemes, a PLI scheme is production linked, as in when a company hits a certain number of predefined targets in terms of production, they get incentives. But a specs sort of a scheme already gives these companies upfront expenditure for any sort of capex that they do. So in MeitY's case, that was up to 25% of the capex that these companies were required to do. So this is what we're hearing. We're hearing that this package could be anywhere between 5 and 10,000 crore rupees in terms of worth. It has received in principle agreement from the Ministry of Heavy Industries, which will be the nodal industry for this particular scheme. And the aim of this package is to increase the domestic value addition in battery manufacturing from anywhere between 50 to 60% is what we need now from this scheme.
Right, Rishabh. Thanks for that. Now, as the 2025 budget approaches, we at NDTV Profit are focusing on what the farmers expect from the Finance Ministry in the agriculture sector. NDTV's Himanshu Shekhar spoke with farmers in Aurangabad to understand their thoughts on schemes that could be beneficial for them. Listen in.
के तीसरे कार्यकाल के दौरान सरकार का विशेष फोकस कृषि संकट पर और किसानों पर रहा है। इस साल के बजट में वित्त मंत्री को कृषि क्षेत्र के लिए क्या करना चाहिए, क्या नए प्रस्ताव किसानों के लिए जरूरी हैं, इन सब महत्वपूर्ण मुद्दों पर बात करने के लिए इस वक्त मोदी नगर के औरंगाबाद गदाना गांव में मेरे साथ कुछ किसान हैं जो पिछले कई दशक से इस इलाके में खेती करते रहे। हुस्न सिंह जी, पहला सवाल आपसे पूछना चाहता हूं कि आपके जैसे जो आम किसान हैं, दिल्ली से सटा हुआ ये इलाका है 40-45 किलोमीटर दूर, इस बार वित्त मंत्री को बजट में आपके जैसे जो किसान हैं उनके लिए क्या करना चाहिए?
नहीं, हमारी तो सबसे पहले समस्या तो यह है कि डाई 1550 की दे रहे, जो कि 1350 की ब्लैक। यूरिया 266 रुपए का 50 पैसे का बताते हैं और मिल रहा 300 रुपए का, और उसमें सल्फर अलग लगा हुआ है 100 रुपए का 200 रुपए का एक कट्टे पे, और ऐसे डाई पे ये अपनी दवाई और बेच के दुकान वाले।
तो खाद महंगा हो गया।
सोसाइटी वाले भी लोग है, नैनो लोग नैनो कुछ असर करती नहीं,
तो खाद महंगा हो गया है आपके,
मिल ही नहीं रहा, मिलने की समस्या। और दूसरी चीज और लगा के देगा उसकी गैल 100-200 रुपए हर कट्टे पे
जी। तो आपको लगता है कि खाद सब्सिडी एक इशू है, एक मुद्दा है आपके लिए, वित्त मंत्री को इससे बढ़ाने पर विचार करना चाहिए?
अब बढ़ावा टाइम पे मिले, टाइम पे तो मिला, टाइम पे मिलता ही ना।
खाद सब्सिडी बढ़नी चाहिए।
अब डाई की जरूरत पड़ा तो डाई ना मिलती उस टाइम पे, जब यूरिया की जरूरत पड़ा उस टाइम पे यूरिया ना मिलता।
उपलब्धता का एक मुद्दा है।
तो कैसे पैदा होगी? पैदावार घट रही है फिर।
जी, एमएसपी को लेके सवाल समय समय पर उठते रहे हैं कि दिल्ली में जो एमएसपी रेट तय की जाती है अलग अलग महत्वपूर्ण फसलों की, वो जमीन पर मंडियों में किसानों को नहीं मिलती। ये कितना बड़ा इशू है? क्या यहाँ किसानों को एमएसपी रेट जो दिल्ली में तय होता है वो उस रेट पर मिलता है मंडियों?
नहीं मिलता। अब आप लगा लीजिए, गेहूं का 2200 कुछ रुपए तय किया था एमएसपी, और 2018-1900 तक बिका है मार्केट में। मिलता ही नहीं। जो दिल्ली में एमएसपी तय होती है वो हम लोगों को नहीं मिलता है। बाजार में कुछ रेट रहता है, एमएसपी कुछ और होती है। किसान रोक नहीं सकता क्योंकि किसान की मजबूरी है, वो इतना रख नहीं सकता। उसे पैसे की आवश्यकता है बेचारे को। कर्जदार पहले ही बैठा हुआ है वो, तो कहाँ से वो उसकी पूर्ति होगी? अब गन्ने का है, गन्ने का पेमेंट नहीं होता। एक साल गन्ना तैयार करने में लगता है, एक साल के बाद पेमेंट आता है, और वो भी टाइम पे नहीं आता।
ये एक शुगर केन बेल्ट है और मेरे चारों तरफ आप देख सकते हैं कि ये गन्ने के खेत यहाँ पर हैं, और यहाँ पर सबसे ज्यादा जो खेती है वो गन्ने की होती है। आपका नाम?
अमरजीत सिंह है जी।
अमरजीत जी, आपके भी गन्ने की खेत हम अभी देख कर आए। अभी गन्ने के किसानों की क्या समस्या? क्या पेमेंट समय पर नहीं मिल पा रहा?
गन्नों के तो बहुत बड़ी समस्या है किसानों की। एक तो पेमेंट टाइम पे नहीं मिलता जी, फिर वाजिब रेट नहीं मिल रहा। रेट जो है पिछले साल सरकार ने 25 रुपए बढ़ा कर देने की कही थी, इस साल से वे भी लागू न करे जी। फिर गन्नों को आवारा पशु ज्यादा खा जाओ जी, 30 से 35% तो आवारा पशुओं का नुकसान है जी। फिर 25 से 30 रुपए कुंटल का रेट में कम है जी। वो टाइम पे ना तो डाई मिलती खेत में लगाने के लायक, ना टाइम पे यूरिया मिलता, ना पानी मिलता जी। हमारे माइनर है, उससे सिंचाई होती है, ना समय पे पानी मिलता जी।
Viewers, amid the fall in rupee, government sources tell NDTV Profit that the currency is faring well compared to other emerging markets, and that a fall in the rupee could serve as a silver lining for Indian exporters. Remember, the rupee has seen sharp recovery against US dollar today. Rishabh Bhatnagar has more on this.
Right. What we're hearing from top government sources on the recent trade data as well as the depreciation of rupee is that they advise that the depreciation of rupee should be seen in context with other emerging economies. So other emerging economies' currencies are doing far worse than how the rupee is trading, and that the rupee is doing better actually than those currencies. There is also a bright side to this rupee depreciation, is that the value of India's exports to economies like the US as well as the EU will go up. On the trade deficit as well, the 14.1% year-on-year trade deficit widening, they said that indicates that there is strong demand in the Indian economy, and that India's GDP growth is nearing about 10% year-on-year, which is good, which is very, very decent growth. As well as the current trade data is also projecting a current account deficit of 1%, which is very healthy for a country like India. That is what top government sources have said on these recent economic trends of the depreciation of rupee as well as the trade data.
Absolutely, Rishabh. Now, the Supreme Court has discharged all contempt proceedings against Indian Medical Association President Dr. R.V. Asokan. For context, Dr. Asokan had made certain remarks against the court while the matter of Patanjali's misleading ads case was sub judice. Varun joins in with more on this.
The Supreme Court has discharged Dr. R.V. Ashokan, who is the president of the Indian Medical Association, of contempt charges over his comments against the top court in the misleading ads case. A little background: in April last year, Dr. Ashokan had remarked that it was unfortunate that the top court was commenting against the IMA and was criticizing the IMA as well as some of the practices of private doctors. Now, Ashokan's remarks followed the court's criticism of IMA, wherein the court had stated that the IMA needs to put its house in order and it needs to address several complaints about unethical practices of doctors. The apex court had taken a strong exceptions to his comments at the time and had directed him to issue a public apology for the same. Now, the top court has also issued a warning to several states in threatening to initiate a contempt action for their inaction over complaints against misleading ads against modern medicine. Now, the court has directed all states to furnish status reports for actions taken on the basis of these complaints received against misleading ads. The top court thereafter said that it will consider compliances by the states of Andhra Pradesh, Delhi, Jammu and Kashmir, Gujarat and Goa on the next date of hearing, which is coming up on the 10th of February.
Right. Now, the Adani Group has tied up with ISKCON to initiate a Mahaprasad Seva program at the Mahakumbh Mela in Prayagraj, Uttar Pradesh. The program, running from January 13 to February 26, is designed to distribute sanctified meals. These meals are known as prasadam and are distributed to millions of pilgrims who are attending this large religious gathering.
We were thinking we were doing 10,000 meals every day, because in Ayodhya opening we had 10,000, but then Mr. Adani moved in, the whole Adani group moved in, and he partnered with us, and so he's financing us. So this gives us the ability to do basically unlimited meals. As much as we have capacity, we are running. As you know, we are having also deities here, so whatever we're cooking, first we offer that we do Naivedya, and so it is prasadam, so it is karma-free diet, and it will give pleasure from inside.
Viewers, today India marked a historic milestone in maritime strength by commissioning 3 state-of-the-art warships, INS Nilgiri, INS Surat and INS Vakshir. This landmark achievement not only showcases India's commitment to self-reliance and strategic autonomy, but also underscores its pivotal role in ensuring stability and security across the Indo-Pacific region. My colleague Sujata Dwivedi gives us more details from the location.
The Indian Navy commissioned its final and 4th warship, that is INS Surat, of the 15B program where we are currently present. INS Surat is said to be one of the first in many aspects, and this was sanctioned in 2011 at a cost of rupees 29,700 crores, and Surat's keel was laid on 7th November 2019, and now that you see the ship has finally been commissioned, and warship has been called the first in many aspects with a length of 164 meters and displacing 7,500 tons. Surat is one of the largest surface combatants to be built indigenously, along with many AI-enabled applications that have been built internally by the engineering department. And also one important feature that INS Surat compiles of is that there are a lot of aspects and a lot of mechanisms that has been built, which is of Make in India program. And as we know that the Atmanirbhar Bharat, which has been followed by the Indian Navy diligently, is now the ship has been a part of it with a potent and steadfast focus and a versatile platform capable of blue water operations across the spectrum of the naval warfare in all dimensions, that is the air, surface, subsurface and electronic. If we also see INS Surat, it is one of the 3 warship, that is the 2 warship and 1 submarine that has been commissioned by the Prime Minister Narendra Modi while in Mumbai that we witnessed. And at the same time, INS Surat is said to be one of the last and the best warship that has been constructed. We have got Mr. Sandeep Shore with us. Sir, you are the captain, the commanding officer of this warship. How different is it? Because as your sailors have been saying that this is the last and the best warship that has been constructed. So what do you have to say about this?
I totally endorse what they say. So they say that we are the final ship of the P-15 Bravo class, and we all say that the crew is together in saying that we are the latest and the best. Yeah, it's a very good feeling. It is with a great sense of pride. I stand here at the time in command of this wonderful warship. We have the best crew, we have the best equipment, best weapons, best sensors, best of everything.
Viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold, into the mutual fund industry over the past couple of years, will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
I present the budget for a historic
Entrepreneurship is like a marathon. You need staying power, so you can't just be impulsive, jump into it, because you'll run out of steam very quickly.
आप कॉन्फ्रेंस रूम में बैठे हो, सैलरीज पेरोल देने के पैसे नहीं है, इट्स 1 week later.
No investment.
Hello and welcome to KYC, a brand new show at NDTV Profit, and in this show we take a look at a company. We talk about how things have panned out for the company in terms of its financials over the past few years. We also talk about the current state of affairs, and of course, consider the many other various parameters, and talk to you about how the company could potentially do. Of course, we'll also get in a perspective many times of management, but also often an analyst with a perspective on the company. And today we're going to talk about Biocon. Well, Biocon has been one of those pharma companies, or should I say healthcare companies, which has been in focus, and it also has seen a lot of volatility of late. But to tell you what it does, well, it's a manufacturer of biotechnology products, and it does look at biosimilars. Of course, it's also into research services. We've already seen Syngene International spin off from Biocon a few years ago. It's also into generics. Biocon, of course, of late has been in the news on account of biologics. It's business which has been taking off significantly. And we're going to take a lot of these aspects and talk about that in future. But As we always do in every show, well, we address the company with respect to what it has done. So among the many other factors that we are in fact talking about, we talk about the income statement, how the growth has been for its profitability as well as its, well, you know, your bottom line, the kind of margins it comes up with, how the state of the balance sheet is at this point in time. We also talk about production and guidance numbers along with the return ratios, and let's not forget the cash flow statements as well, something that we talk about too. You know, moving on, we're also considering the shareholding, the street credentials in terms of how the stock has done, as well as street coverage and, well, valuations. But, you know, that said, let's start by taking a look at the first thing, and that is, of course, the financial performance with respect to its income statement. Now, we do know that, you know, it's been a fairly challenging period for Biocon, but I'm gonna also get in my colleague Varsha, who's going to join us to well, tell us about a lot of the other aspects. But as far as Biocon's financial performance is concerned, we're looking at a 27% growth, CAGR as far as its revenues are concerned. Its EBITDA growing at around 27%. Its margins for FY24 stood at around 22%. But its profit, for the same period has only grown by as much as 11%. And of course, there are plenty of challenges there. But you will find it surprising that while the CAGR in terms of its top line and its operational metrics has been fairly good, and we'll give it a thumbs up to that because, it's not really translated into the kind of traction in the stock price. And the more we uncover about the stock and the more we uncover about the company, the more we will realize as to why there's been so much volatility in the price action. So let me hand it over to Varsha, who will talk to us about the balance sheet. Varsha, how is that looking?
Well, thank you again for that. So if you look at the balance sheet, it's pretty not good. So we would actually give a thumbs down for that. Now why? Because if you see the equity shareholders, that stand at around 20,000 odd crore, but borrowings is actually a concern, and that's also one of the reasons why the net profit CAGR was 11% versus 27% of revenue CAGR, because of the high interest outgo that the company has seen. Now if you see the borrowings are at 16,277 crore, though company has acquired low financing debt. The benefit of that will be seen in interest cost, in next 1 year. But yeah, currently the borrowing stands at around 16,000 odd crore, whereas out of that the long-term borrowing stands at around 13,000 crores and short-term borrowings at almost 3,000 crore. Now, if you see the cash in bank for the company is around, it's 2,259 crore. Now, the main concern over here, which actually investors also didn't like, is the debt position of the company. And that's the reason the company has gone for low financing debt agam.
Sure. All right. So that's as far as the balance sheet is concerned. So not exactly in the strongest of wickets out there, because of your long-term borrowings coming through and taken together. Well, it's. For a pharma company, this debt to equity ratio looks slightly higher. But let's talk about your return ratios then. And again, the return ratios have not been, up to the mark. We're looking at your return on, capital employed just at around 6% for the last couple of years, which means that your return on equity ratios will also be fairly low. And this certainly is a bit of a challenge because you'd like to look at 20%, 25% and over that when it comes to these key return ratios. So it's a thumbs down for that. But cash flows, Varsha, how do they look right now?
So, Agam, the reason why return ratios are low is one of the reasons because they're investing a lot. Now, because of that, your base increases and you're seeing this low return ratios. Now, why I am saying this, because this is linked to the cash flow from operations also, rather net cash flow. If you see, company has got healthy cash flow from operation at around 3,000 crore, which has increased over the years. But if you see the net cash flow is at negative 380 crore. Now, why? Because company has been investing a lot. That's the reason why you see a net cash flow is negative, though operation cash flow from operation is positive. And this is okay. I would like to give a benefit of doubt to the company because this is on the growth path, and company is actually entering into biosimilars, or rather into Biocon Biologics is into biosimilars, and they are investing a lot when it comes to their Malaysian facility. So we'll see almost 90 to 100 million dollars they are investing. So this is because of the capacity expansion. You see your cash flow from investment is so huge increase when it comes to investing activities, and that's the reason we are seeing this negative cash flow. But on the operational side, cash flow from operation, we would like to give a thumbs up.
Okay, so there you have it. Those are the most important, financial statements of the company. Let's look a little bit beyond and talk about the shareholding. It seems like it's a fairly well-held company. If you consider the shareholding, while the promoters continue to hold over 60% in the company, there's a fairly large institutional holding in Biocon as well. Domestic institutions particularly, as well as FIs, and it seems like there's not been a lot of selling from the institutional standpoint. When it comes to your outstanding shareholdings, that still stands at around 20%, but overall, considering 80% is with promoters and institutions, we'd give this one a thumbs up as well. But Varsha, the volatility comes into the returns of the share price, and that's not exactly heartening at the moment.
Correct, Agam. So if you see, it has not given much returns to investors now because Biocon was actually not doing much. Now, why people are betting now on Biocon? Because of the outlook that we'll in a moment speak about. But let's see the stock returns. If in the last 6 months, company has given a 7% return, and in the last 1 year the company has given 37%. While if you see, all the pharma companies have given a good return, while the pharma index in 2024 was a top performer of the year, but this company has not given much returns as expected considering the size of the company. But yeah, outlook seems good, but on the stock returns we would give actually thumbs down.
Okay, and let's talk about the street coverage then. Now, it does seem like there are more, investors and more analysts on the street who are bullish on Biocon as compared to bearish. But what you would also realize is that the overall, downside potential for the company stands around 5%. So the street is not expecting a significant upside from current market levels. And moving on, the expectation is that, we may see a little bit of, even if we don't see slackness, we're not exactly seeing a more appreciation from here on in the long-term standpoint of view, which is why, we give it a neutral to a thumbs down, but it tilts towards a thumbs down because the downside potential is downwards. But Varsha, what about valuations?
Well, so if you see the price to earning ratio for the company, Biocon stands at around 32. Now, if I were to compare it with the peers, now here I've taken Dr. Reddy's and Aurobindo Pharma, especially Aurobindo Pharma, who is actually investing a lot when it comes to biosimilars. So Biocon is at 32p, while Dr. Reddy's is at 21 and Aurobindo Pharma is at 18. While Dr. Reddy's have some other reasons, and that's the reason you're seeing at a 21 PE, but Aurobindo Pharma is actually at 18. So if I were to just see at the trailing PE, Biocon does seems high at a valuation level, but company has been given this premium. One thing is the expectations of the biosimilars, number one. Number two, their Malaysian unit, which has received VAI status from US FDA, is other big leg for the company. And also the company's portfolio into generic segment where you have your diabetes portfolio or GLP-1 product, which are the hot topic currently. So these key, and also the execution capabilities that the Biocon is expected to have in future. A lot of analysts have given a positive note when it comes to the execution capabilities of the Biocon. So these are all the reasons why there may be a slight premium which have been given to Biocon. But of course, you have to also consider this the 32p that you are seeing because of the low net profit that the company has given, but the valuation has not come down because of the growth prospects that the investors are expecting from Biocon.
All right. So, that brings us to your overall rating. And I know that the total will add up to about 3.5 out of 8. But I'm going to take this ad hoc decision and, revise this upwards to 4.5 out of 8. And the reason why is that I was just comparing it to stock returns. And while we weren't exactly happy with the stock returns, a 1 year, it's given you a 37% return. It's beaten mid-cap and the small-cap indices, which is what I realized. So before I come to that, of course, those are the ratings for your income statement or all your financial statements. Balance sheet and return ratios are lackluster. There's no doubt about that. But among the other parameters, let's move on forward and talk about the other factors. So you do have shareholding, which is, of course, a thumbs up. Street credential, well, instead of a thumbs down, we want to revise it to around thumbs up because, when it comes to the mid-cap and the small-cap indices and the kind of movement that they've seen, considering Biocon is currently near a 2-year high. It's not made a 2-year high, but it's currently near a 2-year high. Well, I would want to revise that into a thumbs up in terms of street cred. And of course, the street coverage and valuations, well, they will remain where they are and for good reason, which is why we will have a total rating of around 4.5 out of 8 as far as Biocon is concerned. So there you have it. That's your total return. The total rating as far as this particular healthcare company is concerned. Now, this is as far as what it has done so far. Want to very quickly tell you about what's in store because that perhaps is the more important thing to keep an eye on. So Varsha, why don't you tell us about the little bit about the outlook as well?
Yes, Agam. So firstly, I actually want to highlight the FDA classification because those things are buzzing. The Biocon has been buzzing because of these two reasons. One is the VAI, that is a voluntary action indication for their Bangalore facility, and recently their Malaysian facility, which has got the VAI status. Now, what does this mean? This means that this paves the way for the US, entry for the products, for the newly launched product. One thing is that, and the VAI is actually the second best classification that US FDA can give to the company. If you see, this paves the way for several new launches in the US in the near term, and also approval for when I talk about the Malaysian facility, so approval of biosimilar aspart from the Malaysian facility is expected. Aspart, please note that it treats type 1 and type 2 diabetes, and the current market size for aspart in India is almost 260 crore. So because Malaysian unit has got this VAI status, now this will pave a way for launch of the aspart because there are no other competitive biosimilars, at least currently in the market for aspart. If you see the capex plan for the company, so total capital expenditure for FY25 is projected at $90 to $100 million, and they're going to split between maintenance and an expansion of insulin facility in Malaysia. But you'll see limited financial impact when it comes to Malaysian facility in FY25, but a significant impact is expected in FY26. If I were to talk about the outlook, what the management is saying, so they are expecting an improvement in H2 FY25 on the back of continued recovery in Syngene, which is one of their subsidiaries, and also good momentum in biosimilars. So biosimilars is nothing but, I mean, it's the next leg of growth for Biocon through Biocon Biologics, and the new product launches in generics, which I was talking about, your GLP, that is obesity drugs, is other big factor that company is actually betting on, and of course the execution track record or the execution of the Biocon is also expected to be good. So yeah, these are all the multiple triggers which can support Biocon overall.
Right. Okay. So that's as far as Biocon is concerned in terms of its outlook and a handful of insights and key parameters that we need to keep an eye on. But it would, I guess, be pertinent to get in an expert opinion on not just the company, but maybe the sector as well. So we have with us now Siddhant Khandekar. He's the lead analyst at ICICI Securities. Siddhant, good afternoon, and thank you so much for taking the time out. Let's start off with your overall view on Biocon at the moment, considering where you find it and your outlook going forward for the company.
Yeah, thanks for having me on the show at the first instance. So yeah, I mean, whatever development that we have observed over the last, let's say, 6 months for Biocon, I think that bodes well from their, future pipeline. So whether it is the VI approval for the Malaysian facility, or whether it is the VI that they received in November for Bangalore facility. So both these two do augur well for the next launches, because what we have seen over the last, and in fact, taking the case of this Malaysian facility, it's been in the embargo for the last 2 years. I think since August 22, I think when the US FDA first gave the observations, and again the facility received the the CRL in October 23. CRL is basically the observations from the US FDA that the current manufacturing facility will not be accepted in its current form. So now that has been cleared more or less. So the VI for Malaysia is that paves way for the launch of biosimilar aspart in the US. It's not that it's a very huge opportunity as such, because but the important aspect is there is no biosimilar for this product in the US as of now, except the originator, that is Novo Nordisk's Zoloft. So besides that, there is no product. The current size of this product is around $750 to $800 million in the US. So I think that can be a good opportunity going ahead. And similarly, the approval of the VI for Bangalore facility will pave the way for other oncology products the approval that they received in biosimilar ustekinumab. And we have also 4 or 5 products which are already there in the market. So all said and done, I think these two developments are very significant, because what we have seen is the biosimilar pipeline, the existing products were definitely doing well, but since the new products were not coming, there is a kind of slowdown in the biosimilar revenue front. So I think that is going to change definitely as we see in the next few quarters.
So Siddhant, just to follow up on that, what is your rating on Biocon right now? Are you positive? Because you have mentioned that we're still awaiting more details on new biologics products. So keeping valuations in mind, what's the way forward?
So as of now, we have neutrality. We have not come up any, target price as such. But I think post the Q3 numbers, I think those are scheduled on 30th of January. We'll be revising the target price for sure. And I think because we'll get some more insights, regarding the future pipeline. Now that the management will be able to, convey a lot of details. So I think that bodes well. I think so post Q3 earnings, definitely there will be a revision in the earnings price for sure. Not from us. I think the state is also becoming know about the latest developments, because what we have seen is sorry.
Please go ahead. Please go ahead.
No, so the major overhang for this company is basically the $1.2 billion of debt that is sitting on the balance sheet because of the VR3 acquisition. So for that, I think for servicing that kind of debt, I think you should need the momentum in sales and EBITDA. So I think this kind of approvals, these kind of clearances definitely will pave the way for good amount of cash flows and in the sense debt repayment as well.
Right, Siddhant, Varsha this side. So overall, Biocon Biocon Biologics is expecting a turnaround or accelerated growth when it comes to H2 FY25. So H1 was not that good, but they're expecting good H2 FY25. So what do you think about that? I mean, do you think that H2 will see a reversal and overall will see a good numbers for the company?
So I think the H2 momentum will only come from the market share gain in existing products. I don't think there will be any new product launches that will take place in H2 immediately. That's what I'm saying. So maybe Q4, at the fag end of Q4, you might see some launches, or maybe 1 or 2 launches from these facilities which were which are just received the VAI. But I think the major momentum for a company as such will come from Syngene. I think that is what his expectation is all about. So Biocon Biologics, I don't think there will be just market share gain and maybe a product launch at the fag end, and maybe launches in the non-US market. Let's say for example in Europe, or maybe in ROW markets. So momentum from that, I think, will be mainly on account of market share gain. That is what my expectation is.
Okay. And also, your comment on the pricing aspects when it comes to biosimilars, are pricing getting more competitive as market is moving, towards biosimilars? Because a lot of pharma companies are actually talking about, biosimilars. So any thought on that?
I mean, it depends. I mean, there are certain products which have received the interchangeability clause. I mean, that is very important, I think. So for products which are not under interchangeability, there might be some issues regarding the pricing, because I think the patients are not turning to that product because the doctor is not prescribing the product which is not an interchangeable product. And that is peculiar case for our biosimilars. So for products which are interchangeable, I think definitely there will be a traction, but I think that's a slow process. So all along we can say that yes, there is a less price erosion in the biosimilar product, but if that product is, let's say, interchangeable, I think the product, in that case the price reduction is even better, actually, I would say. It will not be that high the way it happens in generics. But for other products which are not interchangeable biosimilars, I think the acceptance is not there, which is why I think the market share gain will not be there. So biosimilar is typically a peculiar thing. I mean, we cannot simply compare that with generics. The way we, term generics, and the assumption is there for price reduction and stuff like that. Biosimilars are, I think, the field of biosimilar is slightly technical, slightly different. So out and out, we cannot say that there is a kind of a price erosion or whatever. We need to consider the interchangeability factor as well. In that case, yeah.
Siddhant, may I prod you on some competitors that Biocon has in the Indian listed market space? Do you think that you would be tilted slightly more bullishly towards those names, and what names would they be?
I think in terms of the product pipeline, the portfolio, I don't think anybody is near to Biocon. I mean, to a larger extent. I mean, we have seen players like DRL or maybe Aurobindo, but I think their products will take time. I don't think any of these products will be coming in the market or in the US market before at least FY27. Other markets, okay. I mean, there are certain players that who have already launched their products in European markets, in ROW markets. I think Tyres has launched good amount of products. DRL has products. Lupin also has launched a product in Europe. But in the US market, I don't think anybody is near to the kind of portfolio that Biocon possesses. I mean, the kind of pipeline that they have, because I think they were quite early entrant, right? And it's a long gestation process. I mean, biosimilars, it takes around, let's say, 8 to 10 years to fructify. So I don't think other than Biocon, any other player is near to Biocon. Maybe FY27 onwards, FY28 onwards, I think you might see some competition from Indian players, at least in the US market.
Because of this, because just you said that first mover advantage will go to Biocon, and we have seen in the last 3 years company has given 27% CAGR in revenue and 11% CAGR in net profit, of course because of the debt. Now my question to you is, do you see that Biocon may surpass this 27% growth because of the first mover advantage that company has got? I mean, just a kind of number.
Yeah.
Yeah, please go ahead.
I mean, it depends. I mean, yeah. So what has happened, if you see the last 4-5 years, this thing, I think because of COVID, I think there were a lot of disturbances. And biosimilars typically are injectable. So I think there were a lot of, so people were not going to hospitals and stuff like that. So, I mean, the base is something that we need to consider. Then we have seen this kind of slowdown on account of, the plant-related issues. So beyond that, now that we have a slightly lower base again, and then there will be at least 1 or 2 new products launches that will be taking place. I mean, Ustekinda will be there, and that is as per the agreement. And then we also have 1 or 2 products, maybe Aspart also chipping. So yeah, I mean, the kind of growth that we can expect, and then plus if they are going, aggressively on the interchangeability as well. So I think yes. I mean, I don't have any numbers as of now. I have not modeled any number as of now, but I think the growth definitely will be substantial, and it will be better than what we have seen over the last 2 years, for sure.
Right, Siddhant, we leave it at that. Thank you so much for joining us and giving us your insight on Biocon specifically. And it certainly is at a very interesting precipice at this point in time, considering, we're looking forward to more biologic products coming through. And eventually we will know whether or not it can in fact match the kind of growth and in terms of revenue and bottom line that we have seen of late. But as Siddhant has made a point, it certainly is looking like a relatively large base. So, while while 27% may be in contention, we will have to wait and watch out for whether or not that strength continues overall with that large base. But, I'm going to very quickly also recap an HSBC note on Biocon. This is a very recent one. They've upgraded the company to a buy, and they have a set price target of around 430, which entails around a 9 to 10% up move from current market levels. And they believe that Biocon is set for an operational turnaround. They've also said that the recovery in generic sales will also is something that will aid growth. We also have the FDA clearance of the Malaysia plant, which is removed the GMP overhang. And moving on, as far as the launch of its Aspart is concerned in Malaysia, that could potentially be the next catalyst as well going forward. And they say that they believe Biocon is improving its execution too. And no other known biosimilar flyers are there for Aspart, which is why they have in fact raised their estimates for FY26 and FY27. So that's HSBC's view as far as Biocon is concerned. But on that note, thanking Varsha as well for joining me here to taking us through what Biocon holds in store. And on that note, it's also a wrap on this edition of KYC. But don't go anywhere. You're watching NDTV Profit. We'll be back in just a bit.
Well, Budget 2025 is around the corner, and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for. No change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time, did not have any tax